Hello everyone, I am Divya Grover, here to help you take informed mutual fund investment decisions. HDFC Mutual Fund, one of the largest mutual fund houses in India, has earned the trust of investors with consistent long-term returns. Over the last few years, several equity mutual funds of HDFC AMC have performed well, turning out to be top performers in their respective categories. So what are the key characteristics of HDFC Mutual Fund that are responsible for the good performance? Firstly, HDFC Mutual Fund is backed by strong risk management techniques and robust investment process, which has helped it to do well over the long run. The fund house adopts a blend of growth and value-driven investment strategies. In addition, it avoids taking position on momentum-driven bets even if it results in short-term underperformance. And lastly, the fund managers follow the buy and hold approach to investment. They hold the stocks with a long-term view, resulting in a low turnover ratio of 20 to 40%. This strategy has resulted in strong performance, particularly during market rallies, while the performance during bearish phases is reasonable too. On that note, let's take a look at the top 3 equity schemes from HDFC Mutual Fund. We have shortlisted these schemes based on combined quantitative score, assessing them on rolling returns along with risk-reward ratios. So let's get to know about them in detail. Number 1 on our list is HDFC Mid Cap Fund. Launched in June 2007, HDFC Mid Cap Fund, earlier known as HDFC Mid Cap Opportunities Fund, is the most popular scheme in the mid cap mutual fund category. The fund has firmly established its position in the category by delivering above average returns across diverse market conditions. It has flourished under the supervision of its fund manager, Mr. Chirag Setalvad, who is known for his strong conviction in mid-cap and small-cap ideas. In the last 5 years, HDFC Mid-Cap Fund grew at a CAGR of 31% on a rolling return basis compared to 29.5% in the Nifty Mid-Cap 150 TRI Index. As of August 2025, the fund invested 65.4% of its assets in mid-caps, 20.1% in small caps, and 7.5% in large caps. The fund's top stocks are Max Financial Services, Balkrishna Industries, and Coforge. Its top sectors are auto and ancillaries, banks, and pharma and healthcare. The fund has benefited from its strategy of maintaining a well-diversified portfolio of high conviction, fundamentally sound stocks available at reasonable valuations. Moreover, it steers clear of chasing market trends, which helps it reduce the risk while rewarding its investors adequately in the long run. Number 2 on our list is HDFC Focused Fund. Launched in September 2004, HDFC Focused Fund, previously known as HDFC Core and Satellite Fund, invests in a maximum of 30 stocks across sectors. The fund primarily targets well-established large-cap stocks for the core portion of its portfolio, while pursuing growth opportunities with substantial allocation to small-cap and mid-cap stocks. In the last 5 years, HDFC Focused Fund grew at a CAGR of 28% on a rolling return basis compared to 21.4% in the Nifty 500 TRI Index. As of August 2025, the fund invested 66.8% of its assets in large caps, 5.1% in mid caps, 13.9% in small caps. The fund's top stocks are ICICI Bank, HDFC Bank, and Axis Bank. Its top sectors are banks, auto and ancillaries, and pharma and healthcare. By targeting quality stocks available at reasonable valuations, the fund has managed to reduce risk due to a strong margin of safety at the time of investing. The fund has excelled in identifying high potential opportunities across market caps, delivering impressive long-term growth while controlling risk. Number 3 on our list is HDFC Flexi Cap Fund. Launched in January 1995 as HDFC Equity Fund, it was originally structured as a multi-cap fund with a preference for large caps. It underwent a reclassification in January 2021, transforming into HDFC Flexi Cap Fund to adhere to market regulators' revised category definition. Under its current mandate, the fund continues to employ a dynamic investment approach, allocating across market caps depending on the available opportunities, but with a bias towards large caps. Consequently, the transition to a flexi-cap fund category did not have any significant impact on the underlying investment philosophy of the scheme. In the last 5 years, HDFC Flexi Cap Fund grew at a CAGR of 27.7% on a rolling return basis compared to 21.4% in the Nifty 500 TRI index. As of August 2025, the fund invested 74.8% of its assets in large caps, 4.1% in mid caps, and 9.8% in small caps. The fund's top stocks are ICICI Bank, HDFC Bank, and Axis Bank. Its top sectors are banks, auto and ancillaries, and pharma and healthcare. While the fund tends to witness muted growth during bear markets, its performance shines in bullish market phases, offering investors attractive rewards over complete market cycles. Its focus on creating a well-diversified portfolio of fundamentally sound stocks positions it for superior long-term growth. In conclusion, the equity schemes of HDFC Mutual Fund have done well over the years and have rewarded investors with meaningful gains over the long run. However, as an investor, one should ideally avoid concentrating investments in schemes belonging to a particular fund house. Doing so may result in polarized returns, as the investment will be skewed towards a set of stocks, sectors, market cap, or investment style. In other words, if you carry exposure to 2 or more schemes within the same fund house, it is likely that the schemes will mirror each other in terms of outperformance and underperformance. So, when investing, one should aim for optimal diversification by analyzing the composition of the portfolio. Avoid adding multiple schemes with high portfolio overlap, as it may impact the returns. Please note that this video is for information purpose and does not constitute any kind of investment advice or a recommendation to buy, hold, or sell a fund. Returns mentioned herein are in no way a guarantee or promise of future returns. For more guidance on mutual fund investments, subscribe to our YouTube channel. If you like this video, please give a thumbs up and share it with your friends and relatives. Signing off for now. Happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as IA with exchange, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.